Good morning. This is Larry McMillan with the stock market update on Tuesday, January 2nd. Happy New Year to everyone. Well, looks like some traders have been holding back their selling, waiting for the new year so they don't have to pay taxes in 2023 on those gains that they might have by selling today. So we've seen a rush of selling this morning. It is beginning to set off a new sell signal for us, and I wouldn't be surprised if more were to follow in the next few days. But let's review the indicators anyways. First of all, the S&P chart is still positive. It closed the year very near its highs. It has not reached its all-time high at 4,800, but that's certainly still a possibility. What we do have, though, is what we call a McMillan volatility band sell signal. We've been toying with that for over a month, and it hasn't happened, but now this morning it has. So that is the first new sell signal that we've seen here from our indicators in, really quite some time. Put-call ratios continue to drift lower on Friday, so they're remaining on buy signals. It's possible they could roll over to sell signals fairly soon, but that has not been the case. And we don't anticipate our indicators. We just wait for them to be confirmed. The breadth of the market was poor on Friday, and it's, of course, poor again this morning. So that is going to generate a breadth oscillator sell signal from our New York Stock Exchange data. But our broader data, which we call stocks only data, is not giving a sell signal from breadth yet. It probably won't do so today either. It would take probably 2 days of negative breadth in order for that to generate a sell signal. New highs continue to outpace new lows, although the number of new highs is dropping on the New York Stock Exchange. But in any case, that indicator remains positive as well. So the volatility complex is what's probably going to be quite useful in helping us determine direction. And right now, VIX is not reacting very negatively to what's going on. VIX is up about 1.5 points today, with S&P down 40 or so. So that's not that much. So the trend of VIX buy signal is still in place. And we would only begin to be worried if VIX were to close above its 200-day moving average, which is right now about 16. So as long as VIX is closing below 16, there's really not a problem from that indicator. However, VIX is the implied volatility, but realized volatility is on the verge of a sell signal, and that comes from the 20-day historical volatility of the S&P index. So if S&P closes below 4740, we're going to get another sell signal from realized volatility. And in the past, this has been a good indicator, although often a little bit too early. So we'll see how that plays out as today's action moves forward. One thing we'll definitely be keeping an eye on is the term structure of the VIX futures. Basically, whether the price of the Jan VIX futures remains below the price of the Feb VIX futures. So those are the 2 front months. If the front month moves above the second month in price, that's a very negative sign for the market. Right now, that's not happening. The second month is trading at least a full point above the front month. So everything is fine there, as at least no disaster on the horizon. So we're keeping a close watch on these indicators. I invite you to visit our website. We are still having specials on many of our daily products, and those are, of course, the ones that keep track of these indicators in a very short-term basis. Meanwhile, have a great week trading, and again, Happy New Year.